This week can make or break the markets. We've got 10% of the S&P 500 reporting earnings this week. Major economic data flooding in, and Bitcoin holding on as traders brace the next big move. We also have Tesla reporting, we have inflation data dropping, the Fed meeting next week, beyond this week, and oh yeah, the US government is still shut down and the China tariff war seems to just keep getting louder. This isn't just another trading week. This is the calm, maybe before the bigger storm. I hope not, but we'll see. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Together, let's dive in. Family, this week is loaded, and I mean loaded. We're talking one of the heaviest weeks of the entire quarter for both data and earnings. Roughly 10% of the S&P 500 companies are stepping up to the plate. And headlining that lineup, Tesla. One of the most watched, most traded, and most discussed names in the entire market. We'll see what happens for Elon Musk, him and his team. But here's the deal. These earnings aren't just about revenue and EPS. They're a pulse check on the entire U.S. economy. When companies start reporting shrinking margins, soft guidance, or slowing sales, it's not just a corporate story. It's a signal. A signal that consumer strength might be fading, that demand is softening, and that the engine driving America's markets could be cooling off. And remember, when corporate profits slide, it doesn't stop at the stock market. It ripples across the bond market as well. It affects the credit conditions, and yes, it touches Bitcoin too. Because liquidity is the tide that lifts or sinks all boats. When that tide goes out, even strong assets can get caught in the undertow. Meanwhile, everyone's got one eye on this week's data and the other locked into next week's Federal Reserve meeting. The tension, it's real, especially within the market. You can feel it on X, on social media, or anything else. You see every CPI release, every jobless claim, every earnings call, it all feeds into one big question. What will the Fed do next? Investors are hypersensitive. Algorithms are reacting to every word and every data form that comes out. You see, every decimal point in inflation, every sign that the economy might be either cooling or going too fast, it's not enough because people want more all the time. So what does that mean for us as hodlers and traders and investors? It means this is the week where discipline beats emotion. Watch the data, watch the market's reaction, and remember that the best opportunities often come when everyone else is too distracted by the noise. So let's break that down. What's coming up and why it matters. Wednesday, we'll get the U.S. crude oil inventory data. And this is huge. Why? Because oil prices drive inflation. We see that it's been going down, and we'll hope it continues. And inflation drives the Fed. And we'll see if those rate cuts, like we expect next week or the following week, should happen. And we'll also see, is there a shift in sentiment? Thursday, we'll get September's existing home sale data. The housing market has been a major pain point in the economy. With mortgage rates hovering near multi-decade highs, affordability is collapsing. This number will show whether buyers are finally stepping back in or if demand is holding despite the pain. And I actually think it's going to get better now for housing. Friday's the big one. We've got September CPI inflation, October services PMI, and October Michigan consumer sentiment data, all hitting the tape the same morning. This is what traders call a triple data threat. CPI tells us where inflation's headed, PMI gives us insight into business activity, and consumer sentiment, well, that's the heartbeat of the American consumer. If these numbers come in hot, the Fed could stay hawkish longer. I doubt it. But if they cool, it could confirm what we all think the Bitcoin bulls are hoping for as well. Rate cuts on the horizon, hopefully at least 2 more this year in 2025. And just when you thought the economy had enough on its plate, we've got the government shutdown still dragging on this week. Right now, it's not just a political standoff, it's an economic time bomb. If this doesn't get resolved by Tuesday, analysts are warning it could stretch beyond 40 days. I think we're about 20 days so far. And the previous record was 35. So that means delayed economic reports, frozen paychecks for hundreds or thousands of federal workers, and rising anxiety across Wall Street and Main Street alike. You see, markets hate uncertainty, and that's exactly what the shutdown delivers. Without reliable data, the Fed is flying blind. Investors are guessing, and the volatility index keeps climbing. And as if that weren't enough, the trade war with China seems to be continuing to heat up every day on Twitter. You see, President Trump's latest tariff push has the global markets on edge, reigniting fears of supply chain disruptions or higher import costs. Every new headline adds fuel to the fire. Here's the connection most people miss. When tariffs rise, costs rise. When costs rise, inflation sticks around. And when the inflation sticks, the Fed can't pivot. They're forced to stick together and stay higher for longer. That's the domino effect we're watching play out. A political standoff in Washington, a tariff battle with Beijing, and a Federal Reserve stuck in the middle, all creating the perfect storm of uncertainty. And when uncertainty spikes, liquidity tightens, risk assets wobble, and the cycle of fear feeds on itself. That's why the environment matters for Bitcoin. It thrives in chaos over time, but it often gets hit first when the fear trades kicks in because it's trading 24/7. So keep your eyes on the shutdown headlines and the tariff talks this week because these aren't isolated stories. They're all threads in the same fabric of a fragile global economy trying to hold it together. We already see some trouble with Israel and Gaza already. So, anyways, where does Bitcoin go into this? When uncertainty spikes, traders look for safe havens. Historically, that's been gold or the dollar, but we're now seeing a shift from the dollar. Bitcoin is increasingly viewed as a hedge against monetary instability, though it's been trading with the market. The problem, Bitcoin is also tied with liquidity too. When fear rises and investors de-risk, Bitcoin can get hit in the short term, just like equities. But the smart money, the institutions and long-term hodlers like yourself, are quietly accumulating, dollar cost averaging, while everyone else is panicking. This week, watch how Bitcoin reacts around key macro data points. A strong inflation print could pressure it lower short term, but a weak one might spark a relief rally. Either way, remember, have patience and don't panic. Family, the key this week isn't prediction, it's preparation. Markets move on emotion. The ones who survive and thrive are the ones who stay grounded, disciplined, and focused on the long game. Remember what Warren Buffett said. The stock market is a device for transferring money from the impatient to the patient. Be patient. And as Michael Saylor reminds us, you don't get rich by timing the market. You get rich by holding the hardest asset through time. That should be you, hodlers. That's the mindset. That's how you lead, pray, and hodl. So what do you think, family? Will this week's economic data move Bitcoin higher or push it lower? Are we headed into a short-term pullback or a setup for the next big breakout? Drop your thoughts in the comments below. I want to hear what you think, and I know that I read every single one because I care about this community. And don't forget to like, subscribe, and share this video with someone who loves Bitcoin and financial news as much as you. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.